Hello, welcome everyone. Welcome to the new Solarplaza's webinar, the impact of rising inflation and interest rates on the Italian PV asset pricing dynamics. We already have our speakers lined up, so welcome to everyone. We see Carlo Montella, Filippo Stefanelli, Luca Mattore, Tommaso Albetti, and Raffaele Ciotta. Welcome, gentlemen. Good to have you here, and welcome also to our audience. Quick intro just from my end, a brief intro about Solarplaza related to the conference and the events. The events we organize almost 200 now this year, all around the world. We focus on PV. Quick notes also about two side branches. We're developing Solarplaza consultancy, especially for IPPs and for developers looking to acquire or co-develop new projects into new markets. So feel free also to reach me after the webinar to expand on the topic. And also very important, Solarplaza Foundation, which is involved in projects, especially for at this moment in Africa, developing and enabling renewables for as many people as possible. Quick remark, just to contextualize also today's webinar, we will be seeing each other on July 13. Also, all the speakers that are here today will be at Solarplaza Summit Italy, 7th edition this year, 13th July. Mark it on your calendars, and we'll be seeing each other in Rome. Some practical notes. We try to make this interactive as possible, so please send in your questions. We will have a Q&A time at the end, also perhaps during the panel discussion, so feel free to send your questions. For technical issues, also, there's my colleague Tom kindly helping here, so if there's problems with audio or anything, please send in, we'll try to solve it. And yes, we do have some presentation slides. We will make them available also with full recordings. Just give us 1 or 2 days and they will be in your email inbox. So that was an intro from me. How we're going to structure it. Today we're going to have a presentation from Tommaso Albetti from Elements. Then we are going to go into I call it a roundtable panel discussion on what are the main factors that are impacting now asset prices, PV asset prices in Italy, trying to get a bit everyone's perspective here, both from utility side, advisory side, and also investment side. So hope we give a nice flavor there. And then, of course, we'll try to answer your questions and maybe also include them during the panel discussion. With that said, Tommaso, I leave it to you for the presentation of today, and please also then take part into the debate and panel discussion for later. But Tommaso, the stage is yours.
Thank you, Nicola, and welcome everyone. So, what is my task today is to trigger the discussion, basically, which will take place with all the professionals you see above me. So, introducing some new economics for PV these days. I will focus on current costs, both on the industrial part of the cost, which is the cost of the panels, the cost of the structures, basically all the elements contributing to determining the final capex, and to some DevEx part in a different way, in different models. So I will give you what is a ballpark of cost today for buying ready-to-build project here, for the co-development, for in-house development. And finally, I'll try to define the LCOE levels these days and try to compare it with both GSE auctions and also the current level of PPAs. So I will not give you any prediction on the future level of price because I wouldn't be able to do so, but maybe some of the elements I will introduce will help the discussion around these around this issue. So let me start by showing you today what we believe is the level of capex, excluding development costs, for a PV plant expected to be commissioned, let's say, Q3 2023. So a plant which have already started construction. We believe that today the final cost overall is around 800K per megawatt, which is quite a lot if you compare it with what was the level before COVID or in the first month of COVID, anyhow, early 2020, late 2019, in which we know we have some clients which was able to build with 650,000 euros per megawatt, euros per megawatt. So we had an increase of around 22% of the cost of the EPC part compared with what we had a couple of years ago. Together with this, you can find it bizarre, but that's the way it is. Also, the cost of the project increased a lot. You see here these 260K euro per megawatt, which, well, it's a national average. So doesn't say a lot of what's going on in the market today. You have a lot of projects which you maybe tried to buy for 300K and you were not able to do so because the final price was even higher than that. Obviously, we do know that there are projects which were sold well above these 300K threshold, but also we have other projects in industrial areas in the north which were sold at lowest level than this. So we believe that somehow, even considering all the regional differences, a national average could be in this ballpark, and this is more than double the price we had 2 years ago. Even though, as you've seen, the capex has increased, even though the amount of the project which are currently permitted project or ready-to-build project which are currently in the market have increased. We estimate that today we have around 8 gigawatts of ready-to-build projects. So projects which are fully permitted after the challenge period can be defined properly as ready-to-build, but nevertheless, the cost of the ready-to-build project increased a lot, and this obviously led with him this increased value also increased the price for co-development. It's not easy to define. If it was not easy to define a ready-to-build price, it's even much more difficult to define and identify a specific figure for co-development, because we have dozens of different ways to do co-development, in which obviously you can balance in a way or in another the risk. But let's just say that the cost for co-development increased a lot. You can see here these 90K per megawatt. It's obviously intended as the sum of the fees, including the final success fees. Obviously, it depends on the phase, on the dimension on the upfront, on the moment in which you buy, in which you start the collaboration with the co-developer. But anyhow, the value of co-development increased a lot also. And what we are seeing now is that it's even a little bit more difficult to find people which is willing to co-develop compared with what you were able to see 2 or 3 years ago. The reason we believe is here again in the price of ready-to-build project. If the price of ready-to-build project is that high, obviously the developer is willing to take all the chances he has and to try to go all the way until the final authorization, and is a little bit more reluctant to sell the project before ready to build, leaving a lot of money on the table. On the other hand, we don't see the cost of making in-house development for the few which are doing this increased over time. We think that the cost is more or less always the same. You see here this 12K, which is again a simplification of dozens of thousands actually of different situations you may have. In many cases, the cost for in-house organic development may be even lower than this, but let's just say that the cost of developing in-house has not changed a lot compared with what we have a couple of years ago. Still talking about the economics, all the, I'm introducing you all the elements which are necessary to define this index, the LCOE, which I'll show you in a few minutes. OPEX also increased a bit over time, especially some part of the O&M cost have increased in the last few months, also due to the inflation, and we see a plus 22% compared with what we had just at the beginning of 2020. And well, since we have a lot of high-ranked speakers after me, especially Luca Matrone, I'm a bit embarrassed in showing this, but the debt level, as you know, obviously increased a lot compared with what we had a couple of years ago. It's almost 3 times the interest rate of the debt, and obviously this is making even higher the WACC, which you need to consider it when you are discounting your cash flow in this kind of project. Putting all these things together, you see that LCOE have increased a lot compared with what you had just 3 years ago at the end of 2019. We believe that buying a ready-to-build project and considering the EPC cost in Sicily, for instance, at the end of 2019 was leading you to a final LCOE of 50 euro per megawatt hour. Now you are above 70 euro per megawatt hour. And you see all the other levels. Agricultural in the north is higher, much higher, due to the lower irradiation, due to the high cost of land, which is even more expensive in industrial areas. And it's a little bit expensive in Sardinia, for instance, or where you have also higher irradiation. But you see here, this is the new level of LCOE compared with the old level of LCOE. And you will notice that in many cases, you are above the GSE line, the 66 euro per megawatt hour, which is the revenue you can get from GSE, excluding the first 18 months, in which you will find, if you go with the GSE road, you will have merchant price. You have kind of a merchant tail in the first 18 months of commissioning, and this helps a little bit to be in the money in the first year, especially if you take into consideration the current prediction on the future months. Didn't put any line here on the PPA level because well, I think it will be discussed after me, and currently the level of price is changing a bit, so it's not easy to fix in a slide the level of revenues you can get from a PPA this day. But the message here is that in many cases the LCOE are higher than the remuneration you can expect to have, especially obviously if you consider this cost of project, these 300K per megawatt, in which you need to assume as a current price if you're buying an authorization. I think that on my side, as an intro, that's all. And Nicola, I give back the floor to you.
Thank you, Tommaso. And well, what to say? Let's hope we did not scare too many people, right? With those figures. But but they are what they are indeed. And thanks for this overview. Now, I think also today we'd like to have a bit of a discussion here to understand. Yes, we saw some of the critical factors that are impacting asset prices, but there are definitely more elements that go into the modeling and that make actually these prices possible on the market today. So I wanted to open a bit a conversation, Tommaso, if you also want to attach yourself here, and then we can open a conversation. Is what do you see also as the additional variables that have an impact on rising asset prices today, and what goes into the mix that contributes to those levels that we see on the market today?
So, well, just let me give a clarification. Don't want to scare anyone. Also, I think that, and I see that the level of capex in the next few months is going to decrease a little bit. But what I was pointing out, I'm not able to predict the level of cost of the project in the next few months, because every time I try to do so, I always underestimate the cost of the project, which means probably which I always underestimate the appetite of investors these days. But you see, I think that when you are trying to understand which will be the direction of the cost of the project in the next few months, you need to consider, well, the economics. And so the things that I show you, I think that someone needs to consider it. You have to consider that capex is a little bit higher, even if decreasing probably compared with the level I show you, but it's a little bit higher than before. You have to consider the expectation of revenues in terms of power price expectation, which these days, well, are super volatile, obviously, in a war period as we are, but these days are a little bit lower than it was 3, 4, 6, 8 months ago. You have to consider also the number of projects which are going to be in the market, which on the other hand are going to be a little bit more than it was before. Last year we had 5 gigawatts which were permitted in 2022. It's double than the level that we have in 2021. It's 10 times the level that we had in 2020. So I think these are, without any effort to predict because it's useless, but these are the elements that anyone needs to keep in mind when trying to answer the question you raised.
Sure, absolutely. And let us open a discussion here. I would like to also follow the order, perhaps, that we have listed here on our screen. Carlo, maybe going to you. Do you agree in the sense? Yes, there are of course macroeconomic factors that are impacting and global trends like the one in capex, which are impacting asset prices nowadays and are driving values up. But what do you see also as other specific factors, or perhaps country-specific factors that you see have an impact on prices nowadays?
Thanks a lot, Nicola, and thanks also, Tommaso, for your valuable presentation, and thanks for the question. I think that post-COVID, let's say, we have been experienced to live material changes that nowadays and in the next future might have impacts on financial modeling. So to answer to your question, to be straight, and trying to be short in time, I think that for sure capex, as Tommaso well explained, another factor that somehow is construction related is the expected COD date, above all when the transaction is based on greenfield shovel-ready projects still to be realized. In many cases, the actual COD is much later in time than expected, and this might have an impact. So to be able to well estimate all the factors that might actually impact on timing to COD is a key exercise. Obviously, energy price. Also, when you start speaking with a PPA provider about a price and the structure of a mid-long-term PPA, this might change during construction and before COD, and so this is also a factor difficult to estimate. I think another factor that will be key and now is underestimated is the so-called cannibalization effect, above all in certain regions in south of Italy, mainly with specific reference with the Apulia region, Sicily region, because you need to consider all the wind projects that are approaching the end of their incentive life cycle and would be revamped with new additional capacity and new additional capacity from solar, which is counterbalanced by the impact from storage that I think in certain regions in Italy, now I'm making reference to energy intensive standalone projects where there are material bottlenecks in high voltage grid connection points. This also is a difficult factor to be estimated, which is related to possible also curtailment events that might impact the production profile of the specific asset. That prices as well, because when you buy a shovel-ready project, in most of the cases you have not secured yet a commitment by a lender to a long tenor financing, which is linked to a finally consolidated mid-long-term PPA. So it's quite complex, and in a market which is so much volatile, this also is a factor very difficult to be estimated. I can say that in some concrete cases I experienced cases where sponsors in 6 months time delay in what they expected to be time to financial close. Let's say they experienced 100 pips increase of their pricing, and obviously this has an impact. So these to answer to your questions, I think that the main key market trends that we'll see, I will not so much concern about price normalization, which yes will be a trend, but it's not let's say it's not disruptive. I think that the value might be shifted from old technologies to new technologies. So to remain in the solar industry, I think that that agri-solar, which is more complex for several reasons, but is eligible to attract probably high incentives and public grants. Storage is eligible to receive tariffs by Terna or to be merchant based, as the case may be. Green hydrogen combined with solar is eligible to get public grants under the EU Recovery Fund, so-called PNRR in Italy, and incentives for final end consumers. So these technologies might mainly be more remunerated, both by incentives and other than incentives, so merchant-based mechanism, and so may attract higher profit versus a bigger complexity to be managed.
I'll ask a question based on what you also said just now, Carlo. This one to Filippo. Do you also expect that part of the value will go from PV alone into, let's say, let's call them new and hybrid and novel technologies, as Carlo just mentioned, or do you think we will still be expecting, regardless of the fact, a price normalization of assets in the next years to come, regardless of this shift?
Thank you, Nicola. Just some consideration about the context, because renewable will remain the priority, the primary goal focus of the global energy transition. We must converge different issues. From one side, of course, the need of zero emission energy. From the other side, 2 points. The unstable and complex context, and the other point is the rising demand of nuclear renewable capacity, new renewable energy project in the face of a reduced availability of this kind of project in this moment. Of course, the geopolitical context is pushing European countries towards the adoption of new energy supply models. But despite the increase of investment in renewable sector, I think current growth rate is not sufficient to achieve the goal of zero emission economy set for 2050. Focusing the Italian sector, the Italian framework, I can say that we see every day a lot of many regulation interventions that can simplify the authorization process, of course, step by step. I think in the next few years, we can have a great increase of ready-to-build project. Now is clear we have to talk also of not only of authorization process, but we have to take into consideration other important elements. For example, we have to do a question: we are really ready to build several gigawatts in the next few years of new capacity? Because I can consider several points. For example, some supplies in this moment requires an adequate planning. For example, high voltage transformers, I have to schedule the procurement with 10 months, 1 year in advance. For example, I agree with Carlo said. The connection time is an issue of the total project, because we have to take into account the time of connection of the project to the medium voltage or high voltage network. Another aspect concern the EPC availability of EPC contractor availability to guarantee, considering the rising request of project, the availability to guarantee time and cost of construction. In some cases, we have to understand whether, with an industrial approach, whether a split procurement of the main components and construction of the plants. In this way, we can address some construction needs or settle some issue about construction, for example. There will be a great need of new professional trained for manage a big amount of project, and the public administration that are involved in the authorization process. In some cases, after the authorization process, are will be ready to manage the increase in the request. At the end, I can say, in my opinion, in this moment we can't just talking about authorization. The success rate authorization is not enough. We have to enlarge our view, talking about the all phases of the project, construction phase, connection phase, and because it's not a standard process from ready to build to connection these phases can impact the commercial date of the plant. Of course, we have to consider them in a different way in the evaluation process of each project.
Sure. Thank you, Filippo. I'll come back later. I see some questions already coming in, so I'll keep them probably for later. In the meantime, please share your question. I'll move to Luca to stay also within the title here of the webinar. We are mentioning, of course, here interest rates. Now, clearly, Luca, as a bank, of course, you're often, or I would say almost always, forced to pass, of course, interest rate increases, and we saw also the figures before of the weighted average cost of capital that Tommaso showed that are clearly going up, and that has definitely an impact on IRRs. So the question is, do you expect that this scenario, we can fairly assume this sustained scenario of high interest rates will also mean that less and less projects will become bankable, and there will be less and less financing for, I would say, even the next 1 year period without getting ourselves too ahead? And how do you think also at this moment in time banks can somehow bridge the gap to make sure that there is still capital available on the market to keep developing projects?
Okay, so good afternoon, everybody, and thanks for the invite and for the question, Nicola. So basically, we have seen from Tommaso presentation that we have had an increase from, if I remember well, 1.8 to 5.5 of the interest, the all-in interest rate from 2020 to 2022, and obviously, you know, this is the increase that we have had in the reference rate of the central bank. So the European Central Bank did this increase, and so this is the you know, direct effect of that. As you have seen after the February increase, the European Central Bank announced a further increase in March, and basically everybody expects that the interest rates the reference rates will be increased to up 4%. So we should have at least other 0.5% increase, and then potentially an additional 0.5. So from the numbers that you have seen, we have an additional 1% only linked to the reference rate of the European Central Bank. Now, what is this? What is this fact? You know, is this something that will last forever or not? Obviously, you know, this is something that is contingent, and it is you know, due to the objective of keeping the inflation below 2%. So is not you know, an effect that we will have forever. While on the other end, and I think this is with a time frame, longer than the current situation, we have a different push towards an higher liquidity, and so a decrease in the interest rates coming from all the regulation and the requirements that the banks are required by the central banks. So you have heard probably about the so-called green asset ratio, no? That is the amount of renewables or sustainable financing that a bank has to have compared to the total financings that will be a requirement in the future. Many banks have joined voluntary, let's say, association like the Net Zero Banking Alliance that is, targeting to reach a net zero 2050 with basically a trend line from now to 2050 that basically is encouraging the deployment of capital towards solar, renewables, and sustainable financing. So, this is an opposite effect compared to the increase in the interest rates. So the banks will be, more and more committed and in the need to deploy capital in the renewable space, in the solar space, in the renewable space, compared to the, conventional financing. So this is not an effect that will be, visible in 1 month, but in the medium term, this for sure will compensate the situation of the increased interest rates. What I'm not, what I'm sure we will, what I believe we will not reach again is a situation where you have interest rates that are, equal to zero or very, very low, because I think that the situation was a situation that was not pricing correctly the risks, and in fact, in particular, not on solar, but in some technologies that are more risky, like the wind offshore, for example, when you finance at very, very low interest rates, basically then you had problems with the financings, and you got technological risks. So in my view, it was mispriced. No? So probably the situation will be in between the current level and the level that we had before the monetary policy of the European central banks. Now, coming to the so very important again, this point that due to the regulation and due to the voluntary commitments of the bank, we in the future we will see more and more liquidity in the renewables and in the sustainable financings compared to the past. So for the second question that you made, so what the banks can do in order to, let's say, mitigate the impact of the current situation. Well, what we are doing, we are trying to be a bit creative on the financing structures. So, for example, one let's say structure that we are implementing pretty often often during this time is the to give a construction loans with 2-3 years tenor, so that you don't need to have the PPA in place. You don't need to have certainty about the code. Carlo was mentioning that we are experiencing a very big delay in the CODs because you have the disruption of the value chains and you have all the problems coming from Russia-Ukrainian crisis. So all these effects basically have an impact on the certainty about the timing, and so with a construction loan, you don't need to have certainty about the COD or about the PPA, because you give up, let's say, a buffer in order to do obviously the leverage is significantly lower compared to a normal project financing, because you don't have all the mitigations that you have when you have a long-term project financing. And this kind of structure, by the way, envisages either to refinance the construction loan when you reach the COD, or you may have a true-up, let's say, tranche that is increasing the leverage in order to get the target leverage, basically. So these are the kind of flexibility that we are trying to give. And then another relevant structure that unfortunately I don't see very much in the Italian market, but this is not for the bank's preference, but is more from the borrowers, the sponsor preference in Italy. But these are very common structures, for example, in Middle East or in the States, where you have a significant debt capital market, where you have a very deep debt capital market activity. So basically the so-called mini perm structures, so you do financing with debt sizing over a normal unusual long-term project financing, but you cut the legal maturity at year 5, year 6, year 7, so that the interest rates are obviously over a period of 5, 6, 7 years, so are lower. This is a way to cut the interest rates. Obviously, the borrower is taking the refinancing risk at year, when the legal tenor expires. But for an infra asset, unless you have a problematic situation, I don't see a refinancing risk. What may happen is that you have a situation where the interest rates are higher compared to the one in the financing, and you are taking more, let's say, an interest rate risks. But assuming that we are at the top now, I think that this kind of risk is very limited. So this is another way to tackle that.
Yeah, thank you, Luca. Rafael, I'll go also to you. I know you cannot, we don't have you on webcam, but we can still hear you. If I'm not mistaken, just checking.
Yes,
Rafael.
unfortunately, it's not working.
No problem.
Hi all, and thank you for the invite. I'm glad to be here with such important panelists, and thank you, Solarplaza.
Thank you, Rafael. One question is, because to link a bit to what Filippo said, that regardless of the fact more and more will go into renewables, and also what Luca said, regardless of the fact that the balance sheets of banks will move more and more into green assets. I know this is, I'm going to ask a question for which the answer might be not so straightforward. Do you think, also you as Glemon, you look into Italian assets a lot, do you think we will see eventually a bubble in the Italian market for a variety of factors that we discussed also today, or do you think the market is at a healthy state in terms of pricing and in terms of where the value of these assets will go?
Yes, sure. Thank you for the question, Nicola. Just let me give you a quick context of the solar market. Between 2015 and 2018, the solar PV market faced a first consolidation phase with an intense wave and a huge number of M&A deals targeting the utility scale segment, made up of 7.6 gigawatt realized under the old feed-in tariff scheme called Conto Energia. Then from 2018, the capex reduction and the increase in efficiency and of solar PV panels and inverters, in my view, allowed to reach the market parity. Therefore, the developments of new capacity of utility scale solar PV plants has started again. Today, of course, the main problem of until the last year, the main problem for the Italian market has always been the bottleneck on the issuance of new authorization title. Therefore, I still see a market that is characterized by an excess of demand. There is an increasing and high demand of solar assets given the increasing interest towards ESG, of course, in order to meet the decarbonization target to 2030 and to 2050 objectives. In particular, I see from the international investors a strong appetite, in particular for the Italian solar PV. Of course, because for the high irradiance, but also because among the Southern European countries, Italy has the lowest country risk premium. Therefore, so we have on one side a high demand, on the other side, on the supply side, I see still a scarcity number of ready-to-build and operating assets on the market in comparison to the demand. As I told before, due to mainly the bottleneck on the issuance of new authorization titles. So as of today, I see still on the market high valuation. What is a possible trend? Of course, with an increase in the risk-free rate, private assets, in order to remain attractive, should generate higher returns. Nonetheless, we are in an illiquid market, no? So still characterized by, as I told you before, an excess of demand. So in my view, thanks to the issuance of new authorization titles, thanks to the simplification in the authorization procedures, I expect, of course, a normalization in the pricing of the asset, given the increase in the number of the new ready-to-build assets and operating assets on the market, but also the spread and the availability of new technology. I'm thinking to the floating solar PV, the storage, the offshore wind. Therefore, in my view, although today there is still a high valuation for assets, I believe that in the next 2-3 years, there will be a normalization in prices. And also there will be, in my opinion, a different shift in the value of the value allocation from the development premium to the COD asset, because in my opinion, in 2-3 years there will be an increasing demand of COD of brownfield and operating assets.
Very interesting. Thank you, Fred. I'll be taking maybe some questions from the audience now, gentlemen, if you agree. One question which spiked a bit interest relates to project development. Now we don't have really pure play developers today, but still, let me ask this. Can you tell us why most developed Italian PV projects have a power of less than 10 megawatt peak, and according to our attendee, it seems like it's more difficult to develop projects of higher power, so that somehow remains the sweet spot in terms of project development today. Who would like to take the question, assuming maybe we can also back it a little bit by data to show what is the development size of projects today on the Italian market.
I can take this one, Nicola, if that's fine for you.
I was not going to point out, but here you go. Yeah. Go ahead, Tommaso.
I don't see that. I don't see that whatsoever. I see that the average size of a project currently in development, and I see around 60 gigawatt one by one. It's around 30 gigawatt, the average size. So that means that projects below 10 megawatt, at least what I can see, are really a fringe in this scenario. And also, if I look at permitted projects, at least if I look at what I can see, because I cannot see projects with the PAS are not public, so I cannot track them. But the average size of permitted projects is the ballpark of 20 megawatts. So I see large projects in the market, not super large, even if we have a few projects around 100 megawatt, which were permitted. And I don't see a lot of small projects.
May I
please, Carlo, yes.
jump in 1 second on this point, because I agree with Tommaso, and as you said, Tommaso, your assessment is based on mainly EU-based projects because you have well track on them. However, what I see going forward, so this is for sure the right picture as of now. However, going forward, I see, thanks also to the last decree, that as far as PAS related projects has provided their publication, that for bankability purposes means a lot, because mainly it will be as the autorizzazione unica is, and so a big issue related to their bankability might have been solved. Let's see then how it is going to be converted into law. This might be the open gate of a new market that might be very much populated by PAS related projects, having an average capacity around 8, 10, 12, 15 megawatts. And this one reason. Another reason is because many of these projects might be authorized in the north of Italy, where many investors now are shifting their attention, also because the grid, both high voltage and mid voltage, is more available, let's say, without the same issues affecting high voltage grid in south of Italy. And in north of Italy, the average size of these projects, also because there is a huge presence of agricultural lands, might be a bit lower. So as of now, the market has been populated by EU related projects having a capacity of 60, 70, 30, 80, even hundreds and more megawatts, as Tommaso said. Going forward, the trend might be combined, not materially changed, with smaller projects authorized by PAS and mainly located in north of Italy. This is at least what I would expect.
Yeah, and I'm gonna, Carlo, sorry if I step in, because actually the next question relates to PAS, and Luca, for this one I will involve you, because do you think that projects with PAS authorization are bankable today? If yes, if no, and if no, if they can possibly become so in the near future? I'll add to the question that just came in.
No, I don't see, let's say, a problem from an authorization point of view. I think it is more a point of size, no? So obviously, to have a full project financing, it is advisable to have at least 30 million debt. So it would be better to have a portfolio of pass and not a small scale plant. Nevertheless, you may have different solutions that are not full project financing, so you have a lower leverage and also a less complex structure that we can address also through the banking products. So, but these are more, let's say, as far as Intesa is concerned, is more in the retail division basically. So we can do also this kind of we do a lot actually of this kind of financings, but with lower leverage and are also more simpler than a normal project financing.
Thank you. German, allow me to close it with the last question. This one I'll go to Rafael and I'll go also to you, Filippo. If we take as base case 2020 as a year, due to changes in dynamics, capex, inflation parameters, and also additional variables that we mentioned today, do you expect a change in IRR requirements now compared to 2020? And if so, if we can materialize the change that is expected from the investment side for these kinds for projects today in the Italian market? I think Filippo, we just can't hear you. Let's see, probably.
Yes, I try
Yes.
to give some points. To give some points this on this question. Of course, in this moment we have a sort of balance between the increase of capex and then the new scenario, energy scenario, of course, and then that there is a level of RRR that is quite similar, or in some case higher than the IRR of the previous year, of course. Of course, we have to take into consideration the future scenario, the level, of course, the level of wholesale price, and all the other point we discussed today about the cost of capex, the time of construction.
Raffaele, perhaps you wanted...
Yes, my opinion, for sure, if there is an increase in in risk-free rate and interest rates, for sure in the next years, private assets, in order to remain attractive, should generate higher returns, for sure. I also believe, Nicola, that we are landing in a new economic and financial environment in comparison to to the pre-COVID era for high volatility on inflation, interest rates, and commodity prices. Therefore, I consider that today the main variable and complexity for an investor today is how to deal with the current volatility and how to reflect it into the business case. No, the main challenge is taking a medium long-term view on the main macroeconomic assumption related also on the difficult geopolitical situation that we are witnessing. I'm referring to possible and further escalation on the Russia-Ukraine war, but also possible tension between China and Taiwan. No, given the high dependency of the European supply chain on the Chinese suppliers. So therefore, I I consider that this is the main complexity for an investor today, and in my view, there will be for sure an increase also in the expected IRR.
Very clear, very clear. So
Nicola,
clearly,
Nicola, let me know to add a bit about the wholesale market, because at the European level, we are discussing, all the countries are discussing about a new market design that can allow new investment, new trends of investment in renewable sector, of course. I think this is a good point, a good starting point to give the instruments to increase investment in the renewables sector.
Absolutely, absolutely. Yeah, gentlemen, I think let's say not to overcomplicate the model, right? Otherwise, we can factor in quite a lot of variables. I say we can definitely put, if you agree, a stop to today's discussion. And also, I'd like to thank you, because we touched upon several topics. Of course, nobody has the crystal ball, and that's also what we wanted to say, so that we avoided putting down specific price indications of prices and specific trends today. Hopefully, what can I say? We will all see each other at Solarplaza Italy in mid-July. So there probably it's harder to escape from that question, right? When it will come up from the audience. But gentlemen, I'd like to thank you, of course, for being here today, for your inputs. A reminder to everyone also to register and to see each other at Solarplaza Summit Italy this summer. So again, Carlo, Filippo, Luca, Tommaso, and Raffaele, thank you very much for your inputs, and hope to have you soon again with us.
Thank you very much.
Thank you.
Have a nice day.
Bye.
Thank you.